All
Okay,
right.
so you're not broadcasting to all attendees. We'll just wait for people to show up and then you'll introduce me, right?
Yes.
Okay.
Good morning for those of you that are here. We're going to get started in about 4 to 5 minutes. Hi, good morning, everybody. Today, our workshop today is fundamentals of financial management. I'm glad you guys could join us. I'm sure there's a couple more people coming in, but we're going to get started. Just up front, want you guys to know that you will be able to ask questions in the chat, or you can put it in the Q&A. You can also raise your hand. And then we will get to your questions as we go. And if we get to the end, we'll have plenty of time to answer questions. You're also going to get this recording and the slides sent to you in an email from me later today so that you have a copy of them. And that's my spiel. So I'm going to hand it over to Madhu over here. He's going to be your instructor.
Thank you, Laura. Good morning, everybody. Thank you for taking the time to attend this fundamentals of financial management. And my name is Madhu Dewan. I've been a SCORE mentor for 7 years, and I've assisted many clients in developing business and financial plans. I'm a retired person from Bridgestone. I have a background in finance and chemical engineering. So, like Laura said, I will give you a chance to ask questions. But before we get started, I would like some volunteers who are willing to tell me what type of business they are in or thinking of getting in, and what they would like to get out of this webinar. So if there's some couple of volunteers, that helps me in making sure that I'm talking about subjects that are of interest to this group. So I'll give you guys a couple of minutes and see if there are any volunteers.
You guys can type those in the chat or the Q&A. All right, let's see. We have a raised hand. Where'd it go? Okay, go ahead. Oh, go ahead, Sarah.
Unmute. Hello, my name is Sarah DeMonte. I'm from Hudson, Ohio, and I just started a business called the Hudson Home Watch. Home watch companies are very popular in the South and out West, but there's not a lot here in the North. And I have about over 20 years in sales and marketing experience in various B2B roles. And the financial aspect of things were always a little bit of a weakness for me, but I'm very curious to hopefully can put all this together, all my experiences. But the Home Watch, my company, is just getting started. Like it's the website just went live like yesterday. So I'm very new to it. So hopefully I can put everything together. Thank you.
Thank you, Sarah. And I think I'll be talking about both financial planning for starting businesses and ongoing businesses. So hopefully you'll get something out of this webinar. Any other
All right.
volunteers?
We have, I apologize if I say this name, Abiola, help with P&L for newbies. And then e-commerce, just started this year, want to make sure we are establishing and growing the business with strong financial footing.
Okay, all right. I'm sure that we're making comments in relationship to that. Any other volunteers?
Oh, has to unmute. Abiola, go ahead.
Oh, I'm sorry. I didn't mean to put just another question in besides the chat.
Okay, Sarah, go ahead.
I already gave my.
Oh, you
Sarah,
did. I am so sorry.
That's
Benjamin.
okay.
Hey, hey everyone, my name is Ben. It's nice to meet everyone. I'm working on starting a medical training device company out of Massachusetts. And I've been looking over just kind of like our financial statements on kind of how we anticipate doing this with a leasing model. And we have a lot of like a very large deficit, at least when we're looking to start things up. So I was hoping for ideas or thoughts on how to bridge that deficit if we were to have, like, if we were to have contracts in place, but we still have a deficit.
All right, I'll talk about cash flows issues. Hopefully, that will help you, Ben. So we'll talk about it. Okay, so we'll keep going, and I appreciate you guys sharing your questions, so I make sure that I'm on topic with you guys. So again, just a little bit about SCORE. SCORE is a nationwide organization, and our mission is, we are a nonprofit, and our mission is to foster small business communities through mentoring and education, because we think a vibrant business community is very critical to all communities. And we offer any support that small businesses need. So we are doing a live workshop today. We also do mentoring. And if you guys are interested in matching up with a mentor, you can request online or akron.score.org or score.org, and or you can call our office, and Laura will take some basic information and hook you up with a mentor. Other thing I always tell all my clients is that SCORE has a library of what we call recorded webinars. They are typically 45 minutes to 60 minutes long, and they're organized by various subjects like marketing, strategic planning, business plans, operations, technology. Under each category, they have many seminars. I think the last time I checked, we had over 300 webinars. Okay, so you can take these are pre-recorded. You can take them at your own convenience, and obviously, they are typically webinars like this that SCORE records and then makes them available to people who want to use that approach to learning about business subjects. So those are the three, again, those are the ideas that I have for you to learn about business topics, okay? So today we'll talk our presentations in 4 parts. And the first one deals with building the financial plan. This is typically for a startup business or a business looking to expand. Part 2 deals with bookkeeping, as to how to keep track of the transactions that you take in your business. The third part is financial statements. If you do a good job of bookkeeping, you will get financial statements. And then the last one is helping you analyze those statements so you can take corrective action in your business. So again, the 4 parts deal with different stages of your business and different approaches that many of you will be looking for. So starting building the financial plan. Before I talk about the financial plan, just want to make a comment about relationship between a business plan and a financial plan. So anybody wanting to start a business, SCORE recommends that they at least write up a business plan, which deals with the structure of a company, what products you're offering, how you're marketing your product, how you're managing your business. If inventory is involved, how you're managing that, and then also dealing with finances. Really, the financial plan is part of your business plan, okay? And what it does is it converts the information about your business plan into dollars, okay? And that allows you to get a sense of what your income is going to be and what your cash flow will be over time. So again, it takes your ideas from paper and puts them into dollars, okay? So today, we will just talk about the financial plan. SCORE also has seminars on business plans, and you can attend them if you feel you have a need to do so, okay? Okay, before you start getting in the nitty-gritty of the financial plan, there's some homework you should do, because some of this stuff will be needed as you develop the financial plan, okay? If you're selling a product or a service, you should spend some time figuring out what the costs involved are, what your operations are, sales forecast, very important. You should make an effort to forecast sales by month for the first 18 months and then by year for the remaining 3 years. You should also estimate how you're going to make your business known to your potential clients and how much money you're going to be spending on various marketing tools like ads or social media or developing a website or whatever. Okay, so you should need to estimate all your expenses in operations and also in your marketing. Okay, and then especially if you're a startup business, make a list of the money that you need to start your business. Okay, so these are little building pieces that I will show how we all put them all together in a financial plan. Okay, who needs a financial plan? Anybody starting a new business? Obviously, I assume you're starting a business to make some money. So again, this business plan will give you an idea of how much money you're going to make for the next five years. Most of you starting a business are looking for a bank loan. A bank will want to see your financial plan, and their interest is a little different than yours. They're interested in knowing if your business generates enough money to pay their loan back in a timely manner, to loan and interest back. Okay, and if you are doing your business with another partner, then you have some hard numbers to discuss with your business partners as to what is involved in the business. Again, if you are an existing business wishing to expand, and if you want to judge if expansion makes sense, and again, if you need a loan, the bank will to see what is your financial plan. Okay. Some of you may be in not-for-profit businesses, and even not-for-profit businesses need a financial plan if they wish to apply for grants, because the grant donors want to see who else is supporting you, how you're spending your money, and how you will be a viable nonprofit. And then obviously, if you're a nonprofit, as you file your filings with the IRS, the financial plan will help you with that also. Okay, so I talked about who needs a business plan, why have a business plan. So the US is fortunate that we have many, many people like yourselves wanting to start a new business. But unfortunately, 95% of the businesses that are started fail. And some of the major reasons people have studied why new business fail is 82% lack understanding of what do you mean by cash flow. Many people start with too little money, and then their sales are not coming in on a timely manner, so they run out of money. Okay, many new business are very nervous about pricing their products properly, and they price them too low. And when that happens, then you're not covering your costs, and obviously that's not a good situation. And the fourth one is being overly optimistic about sales. Generally speaking, sales takes a little time to develop, and it takes a little time because you're a new business, people don't know about you, people don't trust you at this point. And so you start with a few people before you have a little bit of momentum in getting sales. So be aware of that most new businesses, their sales will be slow. Okay, so there's no point being overly optimistic because that is not a good situation. And lastly, if you're in trouble, seek help. If nothing else, call SCORE or anybody in your circle who's a business person and you trust. Seek help. Okay, I mean, you can discuss it and not take their help, but at least don't step out and ask somebody for help. Okay, all right, so that's the business plan. Okay, so now I'm going to talk about the financial plan. And so if you're a new business, you should make a list of expenses that you need to start the business. This list may include money you need for equipment, money you need for inventory, money you may need for a website. And then also, most new businesses will be losing money the first few months. So you should have money to go through that period, and then have a little bit of contingency, about 10 and 20%. So if things go a little slower, you don't run out of cash. Okay. Now, once you have figured out how much money you need, generally, how do you get that money? And most of my clients, I tell them that they'll need about 10% of the money from their own investment, and then 90% could come from bank loans, okay? The banks want you to have some skin in the game. So if you don't have about 10% of what you're thinking, you need to take steps to save that money, okay? And again, the source of funds for nonprofits, of course, grants, okay? So different approaches in how people get money to do what they want to do, okay? All right. So the best way for me to explain to you what a financial plan is for a startup business is give you an example that I was involved with last year, okay? And again, I have scrubbed some of this data, so, but essentially, it's a company called New Restaurant LLC. And again, I know there's some people from outside our area. They're located in a place called Stowe, and they came to SCORE and they wanted to expand their restaurant business with a food truck, and perhaps add another restaurant in a location called Green. And then they also want to make some updates in their existing restaurant to improve their sales, okay? So as we made a list, and I'll show you that list, we figured out that the whole project would cost $102,000. So we decided the owner would invest $10,000, and we would look for a loan from a bank for $92,000. And it was our hope that that we can get the loan for 10 years. And then the question the client had was, can the loan be paid off, and how much will be his profit, okay? So again, so this is what the starting piece, and now I'm going to get some detail of the numbers to give an example of what the numbers look like, okay? So again, this is a sheet. Hopefully you can all see it. And with the food truck, they're going to buy a used food truck for $30,000 and modified with 15, so they need $45,000 for the food truck. Or the existing Green location, the existing new location, they made a list of things they need, like fryers, refrigerators, tables and chairs, and room modifications, signage, and that total was $31,000. And for the existing store location, they were buying some chairs and tables and freezer and some kitchen equipment, and so that was $16,000. And we estimated that we'll put another in for $10,000, which is primarily for labor that they would need for the food truck and also for the new location. So that's a list of startup expenses. And again, the more detail you have, it gives bank, first of all, it means that you have done your homework in knowing what you need, but then also the banks gets a sense that, hey, you are serious about what you're doing, and you have given it appropriate thought to all this, okay? So again, if you look at if a 10-year loan, your principal repayments would be 120 payments, and the principal repayment would be $767 a month, and the interest rate is 9% at that time. So we figured all this out in the financial plan that I'll show you next. Okay, so this was a piece you do before you start a business, and now when they came to SCORE, I will show you how I use this information and other information to put it all together in a financial plan that would help them and also help the bank in judging their loan application, okay? All right. Let's see now. Okay, so this is a spreadsheet I use. A lot of numbers, but don't get overwhelmed by that. And hopefully you guys can all see it. I will just go down a few columns to tell you how the process works and how money goes in and out of your business, so you can see whether you have chosen the program alone, okay? So the business starts in July of 23. You start with zero. You put your own money, $10,000. So at the end of that month, you have $10,000 in the business checking account. Next month, we started adding their sales in the existing location, $5,000. They got the loan of $92,000. So now they have, they got $97,000 coming in. They had $10,000 to begin with. So now they have $107,000 available to that business. And they spend that, now they're spending money to buy the food, buy the plates, wages for the employees, repairs and maintenance, advertising, rent that they have the current location, telephone, utilities, insurance. And so they spend $3,375 their first month, okay? And now they're also spending money to upgrade their existing location. So we said they had $16,000, so we can't do it in 1 month. So we spent that money over 2 months. And then their own owner's withdrawal was $1,000 that we decided. And so again, they spent $10,000 and they started with $107,000. So now they have $96,000 left in their business checking account, okay? So we carry that over to the next column, which is in September. We start with 96,000. Again, you have money coming in, and now you're also spending money in ongoing expenses. You buy the food, you start paying on your loan principal, 767, and also, let me see, the interest starts next. We got the loan, so we're paying interest here. We're paying loan principal payment there, and we bought the truck for 30,000. Finished some remodeling of the existing place. Owner's withdrawal. Now we have $55,000 left in our checking account. Okay, comes October, we start at $55,000. We have some sales, and now we are modifying the food truck. And so again, we spend more money, and we end up with $40,000. And so again, you keep going on, and you see that, you know, you're spending money to upgrade your business, and then you start spending money to upgrade the new location, $15,500 each month. So now you only have $8,700 left in the business. Okay. All right. Other thing I'll point out is that you took a loan of $92,000. As you paid every month, $767, your loan balance keeps declining. Okay. So you're spending money to invest in your business, and your loan balance is also declining. Okay. So then we did this in the beginning, and then the next month is 2024, and so now we do this exercise for the next 12 months, and the only thing I will kind of draw your attention on that, you know, you start this year with $8,700, you're spending money, and your loan balance is declining, and it reaches a point where it's a little bit critical, okay? But then as your sales pick up from a business, your loan balance again starts going up, and you're back to $10,000 by the end of December 24, okay? So again, this is what I call a difficult period for any business, and you should be careful that you have enough money to go through this period. And but again, you don't do this financial plan, you don't know how much difficult period would be and when it would be, okay? And that there's light end of the tunnel, okay? So then in this period, you're also paying your loan off, and by the end of 2024, your loan is left at $79,000, okay? So, and in the meantime, you're also withdrawing some money from your bank. So the idea I want you to get is that everything that you think about a business, you're putting on a spreadsheet to see how all these numbers come together, okay? And just carrying it on, then I don't do this calculation by month for the future years. I only do it by year. For the first 2 years or by month, I just bring the information over, and then I do the remaining by year. So again, the cash in your business, let me just see. Okay, so your cash position starts with 8,700 in the first year, but as you see, your cash position is building, and by the end of the 5th year, you have $90,000 in your business checking account, okay? And all this time, you're paying yourself, owner's withdrawal, and you're also paying your loan off. So by the end of the 5th year, your loan is down to $42,000, okay? So first of all, that gives you a little comfort that, you know, you have some difficult periods in your business, that you have a loan to take you through. And it gives comfort to the bank that, that they are getting their money and they're getting their interest, so they will approve your loan, okay? So a lot of numbers, a lot of thinking, a lot of guesswork, but I'm gonna just take a minute and let you absorb this and see if there's something in this financial plan that you have a question about.
There's a couple questions from earlier. Are there templates available for those just getting started?
Yes, they are, and generally, so again, I get clients with different level of expertise. Some of my clients will just take the template and run with it, and I share this on Google Sheets. Some people, I take the information and put it in for them, and then I share them in Google Sheets, and then they can keep making the changes. Some people have a hard time getting started. Some people, once you get them started, take off. Okay, so yeah, they're available.
Another question, we use QuickBooks for record keeping, just wondering if there's additional other aspects we should consider.
Yeah, so if you are already using QuickBooks, hopefully you are familiar with that software. And so my comment will be that if you're looking for a loan for existing businesses, you may want to use this approach with the information that you have. You can get it out of QuickBooks, okay? QuickBooks is a very good software for small business to manage ongoing operations, and some of the things that I will show you a little later. QuickBooks will allow you to be able to do that, okay?
Oh, I can answer this question. Is there a fee charged by SCORE for mentoring? No, SCORE is free.
Yeah.
That's the best part.
I should have mentioned that at the beginning. So just for your information, SCORE is a nonprofit, and people like me are all volunteers. Like, in the Akron chapter, we have about 42 volunteers, but nationwide, I forget this number, it's over 5,000 people who are involved in doing this. And we are fortunate enough that we get our funding from many foundations who support our mission, and also from the Small Business Administration. But as far as the clients go, all services are free. And the good thing about that is that way we can give you impartial advice. We don't have a skin in the game. We're not trying to exploit you or anything like that. We'll give you advice that I think is good for your business. Any other questions?
That's all I have right now.
Okay, so
Oh, wait, I do have one more.
yeah,
It seems to be that the wages are estimated for one person only. Is that correct? And if so,
yeah,
is that
they are.
realistic?
Yeah. So this way is for one person, but again, I think the owner was spending a lot of their money, their time themselves, and then he needed a helper to help him. Okay. So again, actually, the wages, if you look at that, so one person in the location store, then other wages for the food truck, and some wages for the green location. So there are more than one person as they expand and hire people. You can put that information in there. All right, so a lot of numbers confuses people, and this slide is a little bit to encourage you to do a financial plan. Okay? So why do clients do not want to do a financial plan? I think a lot of people have difficulty forecasting or estimating the future, and I suggest to them that they do some research at their existing experience. They should get data from there. They should use their actual experience. If you don't have experience, you have to guess. And what I will also tell you is that inaccurate estimates are better than no estimates. Okay, so I think all of us have the ability to forecast the future. We just commit ourselves to it. Okay, many people are not comfortable with numbers. Okay, and like anything else, I think you have to get comfortable with numbers. As a start, look at your personal checking account each month, see how your money is going in, going out. And if you do that a few months, I think you get more comfortable with what the numbers are telling you. You may not like what they're telling you, but they're telling you something, okay? And as time goes on, take the time to learn some spreadsheet software like Excel or Number or Google Sheets. Especially Google Sheets, are available free. Play around with them, work with them, make calculations with them for anything that you'd like. What all does is make you comfortable, okay? So whatever financial plan you make, people think that they have to be correct. That's not true, okay? I like to compare the financial plan like a compass, okay? It tells you which way to go, but it's not like a GPS where it's giving you, point per point directions. So it will not be precise. The real life will be different, but directionally it'll be correct, okay? And you can also update as you get new information. If you end up buying a piece of equipment and costs more than what you thought, you can update that and see how that impacts your ideas, okay? So again, I encourage you to do a financial plan, work with a SCORE mentor or work with somebody you trust, but put some numbers down so you're not totally in the dark, okay? And by the way, if you go for any bank loan, they'll want those numbers anyway. Okay, so that was building a financial plan for a new business. So once you start your business, I want to make some comments about bookkeeping and what is bookkeeping and how you go about doing it. And then we'll come to the financials. Let's talk about bookkeeping, okay? Bookkeeping, I define as a very important part of your financial management. And all it is a organized process of tracking all your income transactions, okay? If you're gonna start a small business, you need to have a system where all money coming in, all money going out is being recorded in some basis, because in some place, okay? And it usually is your business checking account, okay? And again, if you have that information, now you can analyze it to make some good decisions, okay? If you have no bookkeeping, if it's all in your head, or worse, all mixed up with your personal expenses, you will never have any information to know what is happening in your business. So that's bookkeeping, okay? All right. I tell people to start small, start simple. You can start with paper. You can start with a spreadsheet and then obtain a business accounting software. Okay, don't jump into business accounting software right away, because you need to do stuff yourself by hand on a spreadsheet to understand how your business works, okay? Very important, open a separate business checking account and don't mix this with your personal checking account. Each month in your business, start reconciling or analyzing your checking account. Track sales, deposit all sales in that account. And when you pay your expenses, pay online or write business checks from that account. Obtain a separate business credit card, use that for your business expenses. So again, all I'm telling you to keep everything separate from your personal and from your business accounts, okay? You can pay yourself every 2 weeks or every month, okay? But record that as money going out, okay? So again, if you keep this separately, I think that is bookkeeping, and that allows you to understand your business much better, okay? So at some point in time, you will decide that, hey, I want to have a financial management software. And again, when you are there, when you understand your business, you can create the account names and the detail you want. And again, the software then allows you to create cash flow income statements, and the person who is using QuickBooks hopefully they're using that to create those statements, and we'll show you how those statements help your business, help you track the business. So again, depending on the level of your expertise, start simple and then go to a business software. All right, so that much about bookkeeping. Any questions on that subject before I move on?
Go ahead, type your questions in. Right now, there aren't any.
Okay, I'll give 1 minute and then I will. Okay, so let's talk about the part 3, the financial statements, okay? So there are 3 financial statements that are involved in any business. And if you are using a business software, you can use that to create these statements, okay? My purpose today is to explain you what these statements are and what they are telling you, okay? So let's talk about these statements. And by the way, these 3 statements are in order of priority, so understand those 3 statements, okay? So what is a cash flow statement? First of all, cash flow statement is for a specific period of time, for a month or a quarter or a year. So in a cash flow statement, I'll show you one example. You start with your beginning cash balance, and let's say for that month, all the money coming in, like sales collections, owner contributions, loans received, all the money cash inflows coming in the same month, all money going out is called cash outflows, like buying equipment, buying inventory, expense payments, loan payments, owner's withdrawal. So again, you start with a pot of money, some money comes in and adds to it, some money goes out, in the end you have an ending cash balance, okay? And if you do this right, typically your business checking account is a sort of a cash balance, cash flow statement, okay? It shows what your beginning balance was, where you spent money, what money came in, and where you end up. So that's a cash flow that you have in your business checking account. All right. But let me go through an example for a company, okay? This is a pet care company, and in January they had $5,000 in their checking account. We call that cash on hand. That month they received $10,000 in sales. They collected $15,000 from sales that took place previously, and so they received $25,000, okay, in that month of January, okay? Then that month, they spent $14,000 in buying stuff that they sold. Salaries and benefits $3,000, taxes $1,000, other expenses, loan payments. So $23,000 went out, okay? 25 came in, 23 went out. Increase in cash position was $2,000. So they should have $7,000 at the end of January, okay? All right. In the cash flow statement, you carry that over to the next month, February. And again, in February, you have $26,000, and you spend $19,500. Your cash position increased by $6,500. So cash in hand is $30,500, okay? All right. Why is cash flow important, okay? You should always have enough cash in a checking account that you can pay your bills in a timely manner. Sometimes you may end up delaying a payment so till some money comes in, okay? But if that keeps happening on a consistent basis, if you cannot pay your bills on time, then you run out of cash. You start using credit cards, which means you're taking a loan at a very high interest, and pretty soon you're out of business. So managing cash flow on a daily basis, weekly basis, is very important for all their businesses. Also very important if you have employees, you should have enough money to pay them when their paychecks are due, because if you don't make their paychecks, those employees, I can assure you, will walk out the next day, okay? So again, very important, cash flow management is very important. Okay, the next thing I'm gonna talk about is the income statement. Income statement is also for a period of time, month, quarter, year. And here you're trying to match the sales to your costs to see if you are making money each month, okay? You're not carrying this from one month to another, but generally speaking, you're trying to match your money coming in to what you're spending to make those sales. So to see you are profitable on a monthly basis, okay? So again, here's another example. In January, this pet care company, their sales were $18,000. And we call something cost of goods sold to make those sales. They had to buy stuff by $7,000. So their gross profit was $11,000 or 61%, okay? And that very month, they had expenses like salaries, utilities, advertising, insurance, rent, and so they spent $6,500. Their profit before tax was $4,500, okay? Again, we don't carry this over. We go next month, and next month our sales are 20,000. Our cost of goods is 7,500, gross profit 12,500, and then we have these operating expenses, and so that our income that month is 6,200, okay? Many people confuse these two types of statements, okay? And they look similar, and in some months they may be the same, okay? But I just want to point out to you some differences that help you understand that what is used for what, okay? So cash flow tells you how you're running your business day to day. Money's coming in, money's going out, and you have enough money in your business to go day to day. A good example would be that when you are doing a job, you get paid twice a month, you manage your expenses, and then till the next month money comes in, you don't run out of money, okay? And if you see that you're running out of money, you stop going out for dinner or something to make sure that you have money to pay for your rent the next month when that comes due, okay? So that controls how you manage day to day, okay? All right. Income statement tells you something different, okay? It tells you if the pricing of your products and your costs are appropriate, okay? Like I talked about, many new businesses price their products too low. So again, if every month you're seeing an income statement loss, that cannot go on for very much longer, okay? So both these statements are important, and you should look at both of them every month. All right. I'll give you an example of items that can be in one statement, not the other. So like when you have a loan, and I showed you in the previous example, you have principal repayment and you have an interest, okay? Now, principal is a cash flow item and not an income statement item, okay? So you will see principal in the cash flow statement, but not on your income statement, okay? Interest is both a cash flow and income statement item. And the reason is money is going out for interest, and our tax laws allow us to deduct our interest, so we include that in our operating expenses, so our taxes are a little lower, okay? Many of you, if you're lucky enough to have enough cash in your businesses, can issue a dividend to yourself, okay? So again, that is allowed. That is the cash flow item that goes out of your business because you have taken the money out, but it is not a income statement item because it was not related to any product you sold or any service you sold, okay? So items can be cash flow, items can be income statement items, and it takes a little bit of a learning, as you go on to understand them, okay? Okay, balance sheet, that's the third of the statements. And this one gives a overall picture of your business in terms of finances, okay? So as you do your business, you will have what we call assets. You can have cash, you can have receivables, people money owe you. You may have inventory, you may have equipment, you may have business vehicles. All these things to the business have value, and we call them assets, okay? Now, a business may have to pay money to their suppliers. We call them payables. They have to pay their debt, their loans, and that's also liabilities. So these are liabilities, okay? And generally speaking, assets should add up to liabilities and equity. So generally speaking, or you should have more assets than liabilities, which means your business has positive value, okay? So as you keep running your business has the original investment, it has the additional investment, and if you're making money each month, you are retaining some earnings in the business. And really, a positive equity indicates that your business is solvent, and really it should increase over time, that your business is becoming more and more valuable, okay? The owner's equity net worth is the value of your business at any point in time, okay? So again, if you decide to get a loan, they will ask for your balance sheet. They want to see that you have positive equity. Now, the equity is not available, but it's tied up in your assets. But they know that if your business is liquidated, in the end, that's what's left over, okay? And if it's positive, that's good value, okay? So that's the balance sheet, okay? Another example here, as of January 31st, your current asset includes cash, your checking accounts, account receivable, people money that owe you, your inventory. So your current assets are $30,000, okay? The word current means that it can be liquidated in a short term, or it's available to you on a short-term basis, okay? Long-term assets, equipment, $18,000. Depreciation has reduced the value of that, so that's net of $10,000. So this business has $40,000 in assets, okay? Now, the business owes money at $10,000, to their suppliers. Current loans, $3,000. That's current liabilities, $13,000. You have a bank loan, that's your long-term liability. So your total liabilities are $28,000. So again, if you take your assets of $40,000, subtract $28,000, this business that month has a value of $12,000. That's the value that business has to the owner, okay? Okay, so I'm going to stop again and give you guys some thoughts to ask a question. Gives me a break too, before we come to how you compare actual to forecast and why you should do that.
Okay, so question, so wages are a liability.
Yeah.
Yeah, okay. How do I pay myself? I have a business checking account moved to my personal account.
Yes, so they call it call it an owner's draw if you have an LLC. And what I suggest to people is, okay, first of all, you should have money in your account to be able to move to yourself. But I would call that an owner's draw. And at a specific time in the month, I would move that from your business account to your personal checking account.
And then my personal and business are already mixed up. Any suggestions on how to rectify this?
Yeah, and first of all, don't beat yourself over what's already happened, okay? So pick what should I say? Pick a date, and whether it's next month or whatever, 2 months, get yourself a checking account and start, what should I say? Start keeping them separate from some point onwards, okay? All right? Okay. Then at least for the current year, okay? I mean, there's some point that you can take a look at your personal account, business account, clean up as much as you can. If you're working with a CPA, let them help you. I guess the point is that, first of all, start moving forward in the right way. and go back to at least this year and start going in the correct manner, okay? Other approach I would suggest is we are right now in November. Starting January of next year, just separate them, okay? So that way, and then I think you'll need some help from an accounting person to clean it up some more, but at least start off by just separating them.
That's all the questions I have right now.
All right. So, I've been telling about all these things and the financial statements and the bookkeeping and all that. The last piece that we'll discuss is actual to forecast. So I will say that most sophisticated businesses will do this. But again, they will have to before they can compare, they will have to make a forecast, okay? And the forecast can be monthly for a year or two, and year 3 could be quarterly, but you can start with year 1 and 2, okay? Now, how do you make a forecast? That's something that I'm asking you to do. And one way to do that is that if you have actual data for 1 year for your income statement or cash flow statement, then I'll just give you an idea that, let's say you have a business and you earn $10,000. So you have actual data for sales, actual data for costs. So in the forecast, you use that as a basis to see how much you can increase your sales by, how much your cost will be. Since you have some experience, you can forecast that. And then you can, once you put those two things together, you'll have a forecast that, let's say, for the next year. And I believe QuickBooks allows you to make forecasts for your business, okay? So again, first step is you'll have to make some forecasts for your business, okay? All right. So most businesses, use this to see how they're doing compared to what they plan in their business, okay? And also determines areas where you're strong and where you're weak. And if your profits are not compared to your forecast, then you have to take some corrective actions, okay? So I'll show you an example and I will see if this helps you. So this is a comparison of income statement. This person took the trouble to forecast their income for the month of January, and they forecasted that their sales would be $20,000, their cost of goods would be $6,000, gross profit would be $14,000, and gross profit is really the cost of goods to get those sales. Okay, you're matching them there. So your margin is 70%. Okay. On top of that, you have fixed expenses that total $6,400 in the month of January. So your net profit is $7,600 and your margin is 38%. Okay. This was the forecast. This is what you dreamed of doing. This is what your target was. Okay. The month of January is over. You have actual data and you compare that in the same format that you did the forecast. And that's very important. Okay. All right. So first of all, you're expecting sales of 20,000, you only got 18. Your cost for 6,000, you spent 7,000. So what happens? Your gross profit was lower than what you expected. Okay. Now, on the expense side, you were up and down, but really you were only off by $100. Okay. So you had forecasted that you would have a profit of $7,600. You only got $4,500. Okay. So when you look at this comparison, first of all, which side is the problem? The problem is obviously not on the expense side. You're pretty close there. It's a second. Excuse me. You're pretty close there, okay? The problem is on your sales side, okay? Your sales were lower, and maybe you paid more for those products than what you had forecast, okay? So what you can now do is, regarding paying more, you look at different suppliers to see if you can get lower cost. And if your sales are low, you have to see whether you sold less volume and whether you need to advertise more to bump it up, or whether your pricing needs analysis, okay? So it helps you, first of all, you pinpoint the problem on the sales side, and then you have developed strategies the following months to correct that, okay? So this is very typical, but if you had a lot of expenses, your sales are okay, but you're spending more money on advertising, then, you have to see whether that is worth it or not, okay? So it points you which way to go in analyzing your business in the following months, okay? Here's an example of a cash flow statement. Same thing, you made a forecast. You made a forecast that cash would be $5,000. The receipts would be $28,000, and the money paid out would be $22,500, and you expect it to end the month with $5,500. Actual time comes, you start with $5,000, but you end up with $2,000. So what is the problem? You're $3,500 less. Again, the problem here is that it's on the revenue side or the cash side, cash coming in, that it was less than what you expected. So based on that, you try to develop strategies, how to attach your business. And as you do this on a regular basis, you have data to see if you're meeting your goals and your forecasts or not, and you try to take corrective actions, okay? And then when you do this, sometimes some businesses are seasonal, and if you have a forecast for slowdown in seasonal areas, you don't worry about it as much. I mean, you worry anyway when money is tight, but at least you know that come the holidays, the Christmas, things may get better, okay? Okay, so we've talked about some of these things, but I want to do a little bit of summary and give you some more tips. How to start, you are in different stages for businesses. Some tips I give to my clients is, again, have a business checking account and a personal checking account, and run all your sales expenses with that account. Avoid commingling. And one of the clients, one of the attendees talked about that. And to start off with, at least start analyzing your monthly checking account statements. And actually, many banks now, if you have an online account, offer monthly analysis that you can use. And again, all this is available to you, but take the time to understand what they're offering you, to understand how you did each month, okay? So the cash flow thing, I would check every day, every week. At least once a month, I would look at my statement and understand what the statement is telling me, okay? How to analyze. Each one of you have different levels of sophistication. Start with the pen and paper. Many bank people are offering software. You can download your statement to Excel or something and then play with it. Google Spreadsheet is free. You can get numbers or Mint. There's small business software. QuickBooks Online is available. QuickBooks Online actually links your business accounts when you spend money. So when you are writing a check, when you're paying somebody online, that is transferring that information onto your business software, and then that allows you to have income and a cash flow statement, okay? Very important. I have done this all my life. I want you to make that habit. We are not born with financial knowledge, okay? So like anything else, keep learning about financial topics. Now, you learn these kind of things from many people, okay? You can take live recorded webinars like you're doing. You can talk to SCORE mentors. If you have a CPA, when they do your taxes, take the trouble to ask them questions. Ask them if this is if it's an income statement item or a cash flow item. And then, like anything else, finance has their own terminology, okay? So Google things, talk to other business people. If you don't understand something, there's a lot of help available. I think you just have to step out and not get nervous. You may not understand the whole thing, what should I say, right away. For example, I've been doing financial work for 40 years. I don't understand cryptocurrency, okay? So again, if you just Google that and you get a little bit of a knowledge to understand what those things are, and pretty soon you'll learn what to stay away from and where to spend your time, okay? So again, here's some tips, okay? So again, some conclusions, some things to keep in mind. It all starts with proper planning, and cash flow is important because if you're out of cash, you're out of business. Analyze your cash flow and business performance. If you're in retail business, more inventory turns mean more profit. Keep good records. And by the way, if you keep good records, your accountant will be happy for you when you do your taxes every year. Those that will also make it easier for you, okay? And build and use meaningful financial statements, and QuickBooks can help, okay? So lastly, you guys can get your questions ready, and we have time for that. But at least in the Akron area, we have many foundations that share our mission of helping small businesses. The Calhoun Foundation, Akron Community Foundation, the Welty Foundation, and we also get help from banks and a lot of private foundations who believe in our mission. So with that, the formal presentation is over, and I'm willing to take any questions that you may have.
Okay. How many months of working capital should be held in an account? Is it dependent on cash flow?
Yeah. I'll give you some guidelines. And what type of business are you talking about?
Let's see. Jack, what kind of business? Oh, small manufacturing.
Okay. So for manufacturing business, I would have at least 3 months, okay? And that allows you the ups and downs on your revenue side. So again, the general guideline is 3 to 6 months. If your cash coming in is steady, you can get away with 3 months. But if your cash is not steady, you're taking a lot of time to produce your product, go to the 6-month side. But 3 to 6 months is a good guideline.
Okay, my bank sent me a wonderful Excel template with tabs for expenses, revenue projections, etc. It is Huntington.
Well, good to hear that, and thank you for sharing. I send a lot of my clients to Huntington for loans, and like I said, now many banks are offering those services. If your bank is not, ask them about it, okay? And I think they want to provide the tools to you that they can provide online, especially so that you can, make meaningful decisions. Okay, I mean it's in their interest too that you don't get in trouble. Okay, thank you.
Is there an opportunity to rewatch this lesson? Yes, you guys will get a copy of this video in an email later today.
So Laura, we are sending videos now too?
We are, yeah.
All right. Okay. So I didn't know that, but that's okay. Any other questions?
This one's a little lengthy. I have a couple businesses and I don't take salary and I don't have employees. I do contract people. Is there a better way to form a legal company, LLC, sole proprietorship, etc.? Instead of having multiple companies, can I myself be the company, or do I need a company for each different focus? Real estate, hospitality in one business, and community arts in another.
Yeah. All right. So it seems to me you need a mentor, okay? But I will try to give you guidelines of what I suggest if you came to me as a client, okay? Generally speaking, I tell people to set up a different LLC for a different focus of their business, okay? So looks like you have 3 focuses. I would set up a business for your real estate LLC, set up a business for your hospitality, and then the arts one, if it's appropriate, it can be a LLC or a nonprofit company, okay? Um, you can go that way for a while, and so then the reason I'm making the statement is that is helping you analyze the various revenues and costs of those three businesses, okay? You could then set up a holding company, but I would talk to a CPA and see what makes sense. But my advice was based on not mixing up the sales and the costs of those two things, because right now you don't even know. I mean, you probably have a good feel, but you're not sure how much each company is making, okay? And then when things slow down, you won't know where to go to correct your problems, okay? But I gave you the contact information to get a mentor, talk to them. And then if you have a CPA person, talk to them also, okay? And they may have good ideas for you.
All right. What should I be, an LLC or sub S corp? I have 2 W-2 employees and a couple 1099s. I'm purchasing a company that will be a second branch.
Okay, could you please repeat that question again, Laura?
So what should I be, an LLC or sub S corp? I am an LLC now, but purchasing a company that will be a second branch that has 2 W-2 employees.
Okay, so I want you to be an LLC as opposed to a sole proprietor. So it looks like you're on the right track, okay? The difference between a LLC and an S corp. Okay, so let me to start off with, LLC is perhaps the simplest way of dealing with protection of yourself and also doing your taxes, okay? S corp has some more formal requirements, so just be aware of that you have to probably hire somebody to do an S corp. Well, the same token, so like an S corp, you can be an employee of the S corp. It gives you some benefits in dealing with retirement and all that. So again, I would suggest that SCORE has some information on LLC versus an S corp. I would look at that. That's a simple list of benefits, so you understand that. When I have what should I say, advise clients, I usually Google this question, and a lot of good articles written by law attorneys come up, would tell you the benefits of S corp and the problems of S corp with LLC. In my view, and again, this is from my experience, okay? In my view, LLC is the simplest, is a better vehicle than a sole proprietorship. You got to be a little more sophisticated to handle the requirements of an S corp. So again, you could manage your way through the LLCs, but I think I would study that a little bit S corp, because that may require to do some more formal filings than what you have to do with an LLC. But again, I would get a mentor and have that discussion with them.
All right, let me see if I have any more questions. I got a couple of thank yous. Good presentation, calm, warm manner. Thank you both. Any other questions, guys?
Okay, so like I said, I want to thank you for your time, and I am very glad that this it may be of help to you. And like I said, it's a lot of you guys had questions on corporate structure. I believe we have workshop on corporate structure, and I think you guys should go to the SCORE website and attend that seminar or get a mentor. And like I said, these topics, have a lot of details on them, but I think working with a SCORE mentor or taking our workshops, you can deal with that. And even on the finance side, there are a lot of issues that that may or may not confuse you, or you may not be comfortable with. But don't hesitate, just kind of find out more about it. And sometimes things are confusing, but get a mentor and ask them that question, and you'll find your way out of it. So thank you again, and thank you, Laura, for helping me out today.
Sure. I'm going to answer this last question. What's the appropriate turnaround time to begin seeing a mentor? Days, weeks, months? So the turnaround time is you usually get an email or a phone call from a mentor within 48 hours. And then between then, you can meet with them in person, virtually, or you can do counseling through email. You can search on our website and see if you find a mentor that you specifically want to request that maybe matches your business or some of your criteria. So it is a really quick turnaround.
Yeah, so I will add to that. I mean, we encourage our men. Okay, I'm in this business to help you guys, and if when I get a client request, I try to set up a meeting. It takes about a week, and if you're available, we work out a mutual convenient time. And if I don't contact you a couple of days, I get a reminder. So again, we try to be timely. We respect your time. So.
All right, everybody, thank you for joining us. And again, you'll get an email from me later today with the slides as well as the recording.
So Laura, I'll send you this presentation, okay?
Yes, please do.
Okay, thank you.
All right, thanks, everybody. Have a good day.
Bye.